What's going on, everyone? This is Jack with the Trading Tribe, and today we are back at it with another video on how I really prefer to swing trade stocks. And there's a bunch of different ways of doing this out there, so hopefully today is informative and teaches you something. If you find value in today's video, feel free to like and subscribe to the channel. And then if you have any questions throughout the video today, feel free to leave those down below, and I'll make sure to get back to you there. And I really just wanted to show how I typically will swing trade stock and why I prefer to actually use options to do that. So if you want to listen to that, hopefully today's valuable. Feel free to leave those thoughts down below. And today we're going to be looking at my platform, ThinkorSwim, and we're actually going to be looking at Dell just as an example. So here's kind of my broker of choice, which is ThinkorSwim, and here's the ticker symbol for Dell. And with Dell, we can tell that we're in that weekly uptrend here, and we can see that Dell's been moving really nice right the past couple of years and is really just on this major uptrend where it's making these higher highs and higher lows. So over here to the left is this chart that I kind of like to look at to give me just an overall direction of Dell, give me some confidence into what I'm actually trading. And then here in the middle, we can see the last month of Dell specifically. Obviously, we're reaching all-time highs for Dell. So we've had this $62.50 breakout where that's led to a major move in the stock itself. And so, of course, right this last month, we can see the stock has essentially just been making higher highs and higher lows all month. And there's a couple ways we can actually trade this in the markets. And so one of them is to actually just buy Dell. And so if Dell was to make a pullback, let's just say like it did last week, where it pulled back here to 82, we could buy 100 shares, right, and make $500 here, right, by buying it at 82 and selling it up at 87, for example, capturing $5 per share. And let's just say we had about 100 shares, right, that would equate to around $500 of profit. The problem here, though, as you can probably tell, is that would take a lot of capital, right? That would take $8,200 of capital to buy just 100 shares of Dell to make that $500. So although that was a pretty quick trade here, we can see that making that $500, took about $8,200 of opportunity costs, right, where you had to lock up that much money in order to actually make that trade happen. Here's where I'll kind of turn to options. So options really allow you to take that exact same trade. So you can buy calls on this pullback, for example, betting that the stock goes up. And you can really make almost the identical amount of money. So we can open up these calls for Dell. I'll open up the mid-February calls, which are about 2 weeks out, just to show as an example. And then I'll grab these $85 calls, which are essentially if we were to bet that Dell was going to go above $82. And I'll drop that here on the chart off to the left, and we'll make this like a 5-day chart just so we can see kind of how this contract has performed. So this is that call contract, right, where we're betting on Dell to go up past $85. And here in the middle is that Dell chart. They're actually both synced. So if I hover on this pullback here, we'll see on the options contract here on the left, right, that is sunk to the bottom here. And so if we were to buy this call contract down in the ones, that would cost us about $100 per contract. So again, options, you just take that value and you multiply it by 100. So let's just say we bought Dell calls on this pullback, right? We would have got in around that $1 mark. And as you can see, right, this went up all the way to about $3 or past $3. So if we were to have bought in these Dell calls, every $100 that we invested in this trade would have turned into 3 times that, right, if we held into that higher high. So really, really nice profit potential where we can almost make the same amount as trading with $8,000, right, by trading with $100. So hopefully this shows the power to trading with options. You can trade as stocks go up or down. You can trade them pretty safely as well. So this contract here expires in multiple weeks. There's obviously other contracts that expire sooner, and then there's contracts that are even safer. So if we go to the next monthly contract, for example, that value would be a little bit lower, right? Or higher depending on the time frame there, because that does increase the risk or decrease the risk based on the trade we're trying to put on. So hopefully this shows the potential, right, of swing trading stocks using options and why I prefer to actually do this when I'm swing trading stock out there. And one of the major reasons there's that capital efficiency, but hopefully you can see the other potentials out there, especially in terms of sizing in, right? You can buy more than one options contract to really multiply those gains as well. Again, if you have any questions, feel free to leave them down below. Thanks everyone for tuning in. See you next time.